In this video, we will look at monetary policy and how it affects the economy. Central banks conduct a country's monetary policy to prevent the economy from overheating during expansions or boosting the economy when there is a recession. Monetary policy is the main course of action for a central bank and is usually conducted through increasing or decreasing interest rates. Interest rates affect the public's tendency to borrow. If they increase, less people will find it profitable to borrow. For example, if the cost of lending is 2%, an investment with an expected return of 3% would be profitable. On the other hand, if the lending rate was increased to 3.5%, a return of 3% would no longer be profitable. Therefore, people would be reluctant to borrow for low-return investments or for investments with higher returns, as they are generally considered riskier. Similarly, higher interest rates would mean that more people are likely to just deposit their money in a bank instead of making investments somewhere else. Higher rates make borrowing more expensive, but they encourage saving. Higher interest rates also lead to stronger currency on the foreign exchange markets. This helps to reduce the price of important goods. Apart from changing the interest rate, a central bank may buy or sell government bonds, regulate foreign exchange rates, and exchange the amount of cash that the banks need to have as reserves. By managing the money supply, a central bank aims to control and manage inflation, the rate of consumption, economic growth, and liquidity. Economists, analysts, and traders closely watch monetary policy decisions and meeting minutes for clues about a central bank's next move. Such news influences the economy, specific industries, and financial markets. Stay tuned with us for a live webinar about top price action setups with Desmond, and don't forget to visit webinars page on our website to subscribe to more webinars.
Hello everyone, my name is Emily and today we will go through some trading tips. When you're about to begin trading, the best thing to do is start small. Choose only a couple of trading instruments, familiarize yourself with their past price action, and make sure that you perform technical analysis on multiple time frames. Also, familiarize yourself with their fundamentals. For example, if you're about to trade Amazon, you have a good look at what the latest developments are for the company, but also what events lay ahead that could affect the share's price. Your aim is to eliminate the surprise factor as much as you can. You don't have to risk a high amount. Keep the risks minimized by investing low initially, and don't forget to set up a stop-loss order and a profit-taking level. Your aim should be to learn and familiarize yourself with trading, but at the same time to preserve or even increase your capital. So guys, I'm here to give you some ideas on how to accomplish a big goal. First, set your target and time it. Make sure you're realistic and calculated. State how much money you want to make and when you will acquire it. Be specific. Now turn your attention to a big target you have accomplished in the past. It could be a trading winning streak or a single trade winner. Identify the circumstances that contributed to achieving those. What were you trading? Was it moving higher or lower? What direction did you take? Think about what happened then in detail and break it down into sections. This will help you identify the circumstances that work for you. Once you have all of the information down, think of how you can use them again to your advantage. This will help you create a vision in your mind, which will then help you go out and perform. Use as much detail as you can and vision your trading as vividly as possible. The more clearly you can see it in your mind, the easier it will be to manifest. You still have to be realistic though. People have the misconception that they can make huge amounts of money fast and effortlessly. This is a big mistake that the majority of traders make. That's why 90% end up losing everything. Making money as a trader is just like any other job. You have to work hard for it, you have to study, and you have to act fast and accurately. If you study the best traders in the world, they rarely make big profits on a daily basis. They're profitable 9 out of 10 days, but they make marginal profits compared to their balance. If you aim for huge profits, you have to understand the risk you're undertaking. Risk management is one of the most important facets of trading. There is no easy money in trading. Thank you so much for watching us today, guys. See you on Monday. Bye-bye.
Management part 404, which is trailing stop loss techniques, where I'll be covering some of different techniques to put your stop losses. We often want to, in trading, we often want to maximize our profits and obviously cut our losses, right? Maximize profit, minimum losses, right? Okay, before I start the session, maybe just let me guide you guys real quick on where you can look at our past webinar series, or if you have missed today's session, you can come to IronFX. Let me just copy this and paste in the chat. Okay. Okay, so if you have missed any of our webinar series, or if you want to rewatch or have a refresher course on some of the past webinars, you can come to this page, click on past webinars. And this will be the page where we have all the recorded series. So if you are looking for English series, these are all the English series that we have, all the way to, I don't know, probably September, July, September. Yeah, we have all the series here: live trading, MACD strategies, your Fibonacci, etc. You can find all the recorded series here. Okay, top action setups. So don't worry if you have missed any of our sessions, and as well as today's session will be recorded, right? But probably give it a couple days before it's been uploaded, right? Okay, and another page that I want to bring you guys to is the VIP room, which we have in collaboration with IronFX. So Everest Fortune Group actually has a special collaboration with IronFX where we have this VIP trading room, right? So we give exclusive market forecasts, okay, on the page itself. Later, I will show you guys how it looks like. So exclusive market forecast. Okay, if you have any questions, we can answer. We have all our analysts as well as prop traders, and Desmond himself. He will be able to answer any of the questions that you have personally. Okay, you can request. You can even request for any market forecast that you would like us to maybe analyze or to help out with. So this is the access to the premium service. We have 5 tailored account types depending on how much deposit you have with IronFX. So these are the amounts, and these are the different tailored account types that we have, and depending on what you need, right? Okay, so it gives you different access. So this is the VIP portal, sign up if you want to take a look at our VIP portal, right? And this is how it looks like on the page itself. So depending on what tier you're at, there will be different access to our different different currency pairs or different commodities. Okay, so this is the full access. You have the chit chat group where you can actually come in here anytime and you can say, hey Desmond, I want to know where gold will go, for example, and then you can enter. And one of us will be able to answer you in a short period of time. Sometimes we'll come to the potential setups and we'll post some of our top setups here. Okay, news-wise, it will be updated daily. You have your euro, all the important news that we have for the major currency pairs will be updated. So then we have our majors. Okay, DXY, all your USD pairs, yen, and then your commodities like gold, indices, crypto as well. Okay, all your different crosses as well. So if you have seen anything here that anything that's missing here, you can let us know as well. So how this page works is, for example, you can come here and then you can actually highlight different levels using the tools here. So it works kind of like a trading view. So you can highlight important levels and you can say important level here. Will it break? So this is a question that you can pose to us. So important level, highlight it. Okay. So this is how you interact with one of our analysts or prop traders. So you can actually highlight whatever levels that you want and then enter. We'll be able to see it from our back end. And that's how we actually respond to you. Okay, so you have all your different Fibonacci levels if you want to create, if you want to draw, etc. Okay, so this is how our tailored VIP portal looks like. You can check it out. I have pasted the link on the chat box. Okay, so without further ado, maybe let us just start with today's session. Okay, so before I start, obviously I have to say the disclaimer first. So the information in this webinar should not be considered as investment advice or investment recommendation, but instead educational materials only. So before you start trading, please do your own due diligence. Okay. So this is me, Annabelle. I work for the Everest Fortune Group, which is an analyst for the award-winning research firm. Finalist for Best FX Research 2019-2020, as well as finalist for Best Equity Research 2020 and 2021. Okay, so the agenda for today, like I've mentioned, let me grab a pen. Okay, I will do a quick recap on the anatomy of trade for those who have not seen this, right? The anatomy of trade, it talks about the different parts of a trade itself, the whole psychology of it. And then I will do a quick recap on the whole series, part 1, 2, 3, before I start on 4. Then we'll touch on what is trailing stop loss, which is today's topic. When do you use the trailing stop loss? The different techniques. And then I will go into example where it will cover all parts 4 of 4. So I give you a full round. Okay, sorry. I'll give you a full view of the whole part for trade management, right? How you can actually utilize it properly. So the anatomy of trade, for those who have not seen or heard of this, is that for as traders, you often put a lot of effort on your entry, right? We always take a lot of time to find very good setups. Okay, we use a lot of effort and time to find the best setup to just get into an entry before we talk about our stop loss and take profit. Although at the back of our head, we might know that our stop loss take profit should be in a risk to reward 1 to 2 or 1 to 3, right? I mean, this is at the back of it, but often than not, the setup is always more than 50% of our attention, right? You always want to find the best setup before all the rest kicks in, okay? So what we want to tell you guys here is that the whole series that we have been talking about for the past few sessions, not only the entry is important, they are all as important as the entry itself. So the reason why we need to know and learn stop loss, take profit, or even partial profit and trailing stop is because trading is a game of it's a number game, right? So the more take profit you have, the more money you will make, correct? So for example, if you are in a game of 10 trades, okay, for example, if you have 4 take profit, 2 stop loss, and maybe the rest of the 4 is break even, okay, means you have 2 take profit. But if you are in a game of 10 and you have 4 take profit, 4 break even, but if this stop loss was changed to maybe 2 break even, another 2 break even, or maybe 2 trailing stop, for example, right? Your odds will be more than 2 wins, correct? Because if you have 4 TP, let's say you minus 2 trailing stops, probably you have a 3 TP instead, right? So, you know, in trading itself is also about, we always say we want to maximize our profits and minimize our losses. So we always think about profit, but we always do not know how to control this part. That's why you have your break even and your trailing stop loss in place, okay? Partial profit and take profit, obviously it's a bonus itself, okay? So the whole point of here, I guess, is to learn how to minimize losses, okay? So entry, we all know how to do. Stop loss, take profit. All these other parts, I will run through it quickly here. So for the part 1 of 4 trade management, we are talking about profit and stop loss recap. So in this trade itself, for example, we are looking at a range here, right? And we can see that obviously this is a resistance level. Obviously, this is a resistance level because it have came here once and twice, and it's rejecting this level. So you know that this is a magnetic level that we are looking at, correct? So this is a major resistance area, or I would like to call it a magnetic area that we wish to avoid, okay, if you're taking profits. So what we have learned here is that stop loss, you always put it beyond because you want to give it some space for buffer, correct? You know that maybe price would actually come back here to test, right? Because this is a magnetic zone. So prices often than not likes to come to these areas to test again before any other breakouts or any other major movements. So if you're looking at stop loss, we often than not like to place it above, or we call it beyond, so that there's space if it actually sort of bounce out or move out, break out a little bit. And then for our take profit, depending on whether you're in a long or short position, but in general, we always take before, okay, before the major resistance. Sorry. We like to take profit before any major resistance level or any magnetic levels. So the reason being is because you know that price is always going to this level, but sometimes you know prices don't actually go to that level. It might bounce off here, right? And if you have the fixed take profit levels, for example, like 100 pips, do not be so fixated on this, right? Because if price actually come down here and reject it, you might actually lose your whole trade of your 90%. So we often and not want to be out of a trade before any commotion starts at the magnetic zone, or in case it actually, moves away or reflects or bounce off before the magnetic zone. So just take a 90% and ignore this 10%, okay? In case, prices actually comes here and bounce off and doesn't hit your take profit levels, okay? So this is take profit stop loss recap. Just remember, stop loss is beyond, take profit is before. Okay, this is the simplest. Now we talk about break-even placements. Okay, so can any one of you tell me what is break-even? Right, I've covered this on my second session. Okay, some of you says a break-even is at is to move your stop loss up, correct? Okay. For those who are new or who does not know what break-even means, in simple term, break-evens means that you do not lose any money or win any money. Right? But generally, if you enter a trade, you technically have already lost some money because of commission or spreads that the broker has already charged you. So in any case, for break-even placement, break-even is often when you are in profit already. Okay, remember this. Break-even can happen only if you are in profit, right? There's no break-even when you are in a loss or if you're losing money. Okay, so break-even also means that you move your stop loss up to your entry level, which also means that your you have already made some money. If not, you wouldn't be able to move your stop loss up to your entry, right? So break even is a level where you are in profit, okay, often, and recognize that there's a risk of reversal. So it's basically you saying, if I am right, price should go all the way to my target, but if I am wrong, I should get out. Okay, so break even is a essential tool in preventing prices to go to stop loss. But some people might argue that, break even, if you move it to break even, it also minimizes your chances of a full take profit, right? You could actually take a full profit, but instead you go to break even, which means you don't make any money out of this trade. That is why I often put break even together with my partial profit, right? So you move your break even up and then you take partial profit. So in case it actually comes back down, you are already you already have some profits in your pocket. Okay, so instead of a zero, you actually make some money. So in this instance, this example, I'll quickly run through it. You can see that prices are moving in an upward direction. So we are looking for a buy entry here. So we buy entry here at this level, and then we see that, hey, prices are actually not that great. Prices are ranging, and I'm a bit worried that price might reverse. So when my price actually moved to this level, I am being triggered to move my break even, okay? Because I entered here, by this level, I would have some profits, right? And this is the level that I'm worried also, because maybe there is a retracement level, maybe it's oversold or overbought, but in any case, it will be a level that one should take note. So at this level, I'll put a trigger and then I'll monitor. So if price actually retraced, I might move my stop loss up. I might modify my position. But if, let's say, it triggers here and I monitor it, but it goes this way, I might not have to move my stop loss. But for the purpose of the break-even placement, yes, we will just move my stop loss line up to entry. So in case actually if price go up and comes back down, which happened, I will not have lost any money. Okay, so this is how break-even works. It's often in profit, then you move up because that's the only chance that you can move your stop loss line. Okay, if you're in losses, for example, if price actually come this way, your position is here, you're long, but then it comes this way, you can move your stop loss here, but then you will be taken out. So it doesn't make sense at all. And then you will be in a loss. Okay, so this is what break even means. Often it's when you are in profit. Partial profit. Okay, these two are put together because it makes a good pair. So for example, this same thing, this is our break-even trigger. Okay, break-even trigger. We entered here, same position, we are longing. Okay, I move my stop loss here. At which point would we take partial profit? Some might ask. So that's the question that I get quite often. Where do you actually take your partial profit? I mean, that's quite a logical question, some might ask. So it's depending on your risk appetite or how much you have in mind to take actually, or you can go by, okay, so there are some ways to do it. So you can do by percentage of a trade size. You can go by pips, which I won't recommend because it might be too rigid. Actually, these two might be too rigid, but I will just list out the options and I will see which one is the best option. Number 3, so we have percentages, pips. These are some of the methods that people take partial profits anyway. So percentages, pips, you can go by your trend lines as well, right? Maybe there's a major resistance that there's a confluence here that you are afraid, so I will take here. I think honestly, going by trend is the best because it makes the most sense. Instead of this two, it works, but it kind of is slightly more rigid, right? Unless you're often watching the markets or watching your trade positions. Okay, so by taking partial profit based on trend, support levels, etc., confluence means that, for example, if my price actually came to this level, okay, this is my 50% retracement level. This is the level where my there is a reverse what is it called? Remember the term. Okay, there is a 50% retracement. My projection, my 78.6% projection, where my support, my overlapping support or resistance is, there are a lot of factors that is telling me that, hey, this might be an area that price might do a reversal. So then I will do my partial profit taking here before it hits. Okay. So that's why I say the third method, which is trend, support, and resistance level or confluence zone, is the best partial profit placement method that I personally choose because it's the most logical rather than having a fixed pips or percentages which work, but you have to monitor it very often. Okay. And okay, now we have come to the third part, which is idea invalidation. Let's just name it II. Okay, if let me know in the comment section if you have any questions so far, and can anyone tell me what is idea invalidation if you can remember? Just a quick recap. Okay, I have a couple of answers. Okay, idea invalidation is where idea invalidation is a point where you are willing to close out. Okay, that makes sense. Yes. Okay, so what II means, idea invalidation means is that when you have a position, okay, when you have a position and you know that, hey, it has came to a point where I know that my trade is going in the opposite direction and I'm wrong. It's a point where you should find a way to get out of the trade itself. Okay. So when idea is placed, usually idea invalidation is placed before stop loss levels and usually at the zone of confluence. So for example, this is the line of, this is the zone, the confluence zone where you have all your levels that coincides. Your II should always be placed before it, okay? And it's a point where you admit that you might be wrong in the trade and the price is going against you. So the question when it hits your idea invalidation is how to get out. Okay, it's a moment of hoping that price will come back to your break even and you get out ASAP. Okay, but sometimes it might not even come back up. So then you will hit your stop loss naturally. Okay, so idea invalidation is usually placed before your stop loss. It's a level which you basically admit that you are wrong and you should get out of the trade ASAP. When this level is reached, your take profit is moved to your entry, giving you a small chance to get out at break even, but sometimes it might not even come back up, like I've mentioned. So for example, we are looking for a sell entry here. Okay, we are looking at short. Okay. And we have identified that this will be our confluence zone, or rather your idea invalidation and confluence zone, I would say. And then your stop loss is always beyond, correct? Remember what we learned in the first series? Your stop loss is always above your confluence zone because you need some space for buffer. So this will be your II in purple. Okay, now let's say if my take profit is here and then price came down here. Obviously at this point, I'll be very happy because it's in my favor. But somehow it's moving against me, right? This is how trading works, right? 1 minute is going for you, the other is going against you. So then it came here and it hits your II. You know that, hey, I'm actually quite close to my stop loss already. And at this point in time, if it goes up further, actually at this point in time, you should already be you should know that you are wrong in this trade. You know that it's a wrong trade taken. Okay. And if it goes further, I think there might not be any salvation space anymore. Okay. But if it kind of reverses here, and you know that you are in the wrong trade, it's time for you to get out. So if your entry is here, you should move your take profit up to your entry level, okay, in case it reverses again. I know some of you might be thinking that, hey, this is a confluence zone. I might be looking at a slight reversal. Okay. Yes, you are, but once your idea is invalidated and you know that a price might be against you, you should get out of the trade ASAP because it might potentially hit your stop loss. And like what I've mentioned a million times, max profit, min losses, correct? This is what we aim for in any trade positions, okay? So when your idea is already invalidated here, you have to move your take profit up. So the difference between this and break even is that I know that although both are called break even, but break even is when you are in profit and it's when you move your stop loss up to entry. But idea invalidation is when you are in losses and you are hoping to salvage your position by bringing take profit up. Okay, this is the key difference between break even and idea invalidation. This is very important. If you need to, you can take a screenshot, but my handwriting is a bit messy. Okay. Okay, just a quick snap. Okay, if you have any question, do let me know in the comment section. I have another screen that is opened so I can see all your comments and all your questions. Okay. Okay, maybe let me continue. So the key difference is these two. One is stop loss move up, one is take profit move up. But generally what we want to is for prices to come to our break even instead of hit our stop loss. Okay. Okay, now we have come to part 4 of 4, which is trailing stop loss. So can any one of you let me know what is a trailing stop loss, or does any one of you even use a trailing stop loss? Personally, I've used it a couple of times, but let me know in the comments. Okay, I've seen some of you. Yeah, I've used, yes. What methods do you use for your trailing stop loss? Okay, so for trailing stop loss, how it works is we have different methods of using. Some people might be using by percentages as well. Some of you might be using fixed pips, which is the most common. Let me just adjust my handwriting. Fixed pips. So it moves by X number of pips whenever it moves up. Okay, so if it's in a trend, if the position or if the trade or chart rather is moving in very favorably of your position, then this will work, right? If it's a very trend oriented trade, then yes, this will work. But if it's slightly choppy, you might be taken out quite quickly, right? So in today's session of trailing stop loss, we will have multiple techniques for you to learn and to identify, to see which one might suit you better other than this, because most often than not, people use fixed pips, right, for trailing stop loss, okay, in MT4. So what is trailing stop loss? It's an order type designed to lock in profits or limit losses as trade moves favorably. So there is the automatic and there's the manual. So automatic stop loss, meaning like what I've mentioned, MT4, you know, you can fix your stop loss. You can fix your stop loss according to number of pips. So for example, if your entry is here and it keeps going this way, this way, this way, every time so your stop loss is here, right? Take profit. So for example, every time it moves by X amount, and then your stop loss will go at X amount. Okay, X plus 1, and then it will move at X plus 1. Okay, for example. But the downside of using this is when, for example, if it moves up X, but then if it comes down, it might just hit. Okay, so it's depending on your trading method as well. Okay, or whatever that you are more comfortable with. This method works for some. Okay, so today we are focusing more on the manual trailing stop loss. So it's a moving stop loss level based on mechanical indicators. So let's see how this works. So the types of trailing stop losses, let's see. Can any one of you identify all of this? There'll be a present that will be sent out. No, I'm kidding. Can you guys identify what are these trailing stop loss, or what methods are we using here? And please take a guess. Okay, I've seen some answers. Yes, there's a moving average, but that is which alphabet? Okay, I see some trend lines. Yes, trend lines. Could potentially be Fibonacci as well. There's no stochastic here. Okay. Okay, so for A, we have our moving average here, right? It's a very common tool used based on the number of a moving average. There's 50, there's 200, but usually we'll go for the 50. And then there is B, which is our parabolic SAR, stop and reverse, right? It looks at how the prices are actually closer when, how the dots, okay, how the dots and the prices are connected, and at which point in time it actually reverses. So it will tell you exactly when you can, or a signal rather, it will signal or alert you when price is about to reverse based on the dots. Okay, and then we have our ATR, average true range. You have depending on how you actually set it, based on the settings itself, we can use 22 periods multiplied by 3 depending. And then you have your normal standard support and resistance, which is my favorite, or maybe it's just a very traditional old school method that people use quite often. Okay, you can use it as a Fibonacci as well. So if you have learned Fibonacci, you can use this, but if you have not, you can check out our other series where we talk about Fibonacci as a whole. And then lastly, we have the chandelier. Okay, works quite similarly to your parabolic star. Okay, in the sense that it will tell you when it reverses and how it's intercorrelated. Okay, so now let's take a look at an example before I move on to real life trading view to show you guys how this part 4 or the whole trade management series can work together to give you a better edge on how to maximize profit and minimize loss. Okay, so here we can see that there is a trend line. Okay, and we are looking for a breakout sell entry here. This is a key support level as well. So we're looking for a breakout sell entry. Okay, here. Now we look at the moving average trailing stop loss. Same thing, breakout. We're looking for a sell here. Probably my stop loss would be either here or this level, but let's just take it as this level. This is my stop loss, okay, for example. And then we plot out our moving average. This should be a 50 moving average, okay. This is my stop loss. And as price move down, okay, but let me give you one advice is that for this trailing stop loss techniques that I'm about to share, most of them works well when there is a very strong trend line or strong momentum. It doesn't work well with a choppy, for example, like this. It doesn't work well in a choppy situation. Okay, it's best work when there is a strong trend or strong momentum. So usually we will use this in a higher time frame, right? Because then you can see all this more clearly with less noise. Okay. So that's one advice that I want to give. So let's say my stop loss is here. This is my entry. Prices are going downward in favor of me. So let's say when prices actually move down to a certain level, for example, maybe at this level, okay, I would actually move my stop loss down after it breaks this level, right? Because this would be a key level that I'll look out for, like a previous swing low, correct? Once it breaks this level, I will move my stop loss up to this level here, where my moving average is. And do take note that these are all manual trailing stop loss. So you have to come in intervals to actually take note of where your trailing stop loss is. Okay, it doesn't mean that you have to sit there and watch your trade, but rather in intervals, probably a couple of hours, or when there's an alert on your phone, or you can probably set alert as well. So when my price breaks this level, I will get an alert. Hey, price has broken this key support level and my price is still going down. So at this level, when it breaks drastically, I will actually move my stop loss down, probably to this level, right? This is where it breaks, right? So before that, this zone won't be seen. So I would move my stop loss to this level where I can see my moving average. Okay. So once this level, this key support is broken, I will move my stop loss down to this level here where my moving average is. Okay, and then the next key level that I'll be looking at probably be this level here. Okay, so once it kind of breaks, then I will set an alert to move my stop loss maybe here at this level, depending on when it breaks. Okay, and so on and so forth. So when my price actually, let's say for every trend or every support resistance it breaks, I will move my stop loss accordingly, and until a point where my stop loss is triggered. But by then, I would have made some money or some profits already, all right? Because the stop loss is being moved. So this is when my trailing stop loss is triggered. It's okay if it's triggered, right? Because when you have a trailing stop loss, you know that your positions is protected by this and you are already in profit, okay? So let me repeat again for those who have not seen here. How does a moving average trailing stop loss work is I will identify maybe some key levels, and once it actually breaks, I will move this is my stop loss, my original stop loss, right? So once it breaks this level, I will have an alert, hey, this is broken. I will move my stop loss to this level because my moving average is here. So my new stop loss is here. And when it maybe breaks this level here, I will move my stop loss here. Okay, depending on where my moving average is. So usually there is this buffer between your price point and your moving average, right? What is music? What is the SMA 50 setup? For Uma, maybe you can elaborate on what you mean by SMA 50. So we are talking about, for today's session, we are talking about trailing stop losses. And this is how we actually use a SMA 50 to track our trailing, or rather place our trailing stop losses. Okay. So I've mentioned I will identify where my major support or resistance level will be at first. Then as my prices move in favor of me, I will move my stop loss accordingly to where my SMA is. Okay. For example. Okay. See, so if usually when it breaks out of a trend, right, it often than not will fly in the opposite direction. So the trailing stop loss actually got us out before this happened. Okay. Okay, I will show you how to set the SMA 50 later when we move to the live charts. Okay, so the trailing stop loss is important as a tool because it helps you to profit this much before prices actually flew in the opposite direction. Okay. Then we have my favorite, the trend line trailing stop loss. Is very simple because same thing, we are looking for a short position. This is my stop loss. As price move according to my trend line, okay, this is my trend line, right? We are looking for, okay, so for example, if price actually moves down in favor of me, okay, I will move according, same thing, identify your support resistance. As price move according to your trend line downward, you can move your stop loss accordingly. So for example here, if it breaks this, maybe I'll move my stop loss here. If it breaks this level, maybe I'll move my stop loss here. Okay, and it's usually maybe slightly above where your support and resistance is. Okay, because you want to give them the extra buffer, right? Because your stop loss is always beyond, okay, beyond your confluence, beyond your support and resistance, is always beyond. You need that extra buffer, okay, and it is also dependable on what's your risk appetite as well. Okay, so trend line is rather simple. It actually works quite similarly. So for all the trailing stop loss, my advice is that most of them, they work the same way because we have to identify where is the important key levels to look out for before we can mark out where we can place our stop loss. Okay. So break this level, I'll be looking at placing here. Break this level, I'm looking at placing here, which I got stopped out eventually. Okay. Then we have the parabolic SAR, trailing stop loss. So what SAR stands for is stop and reverse. Okay, so as the word itself explains, okay, so these dots, they actually tell you the momentum of a trend. Okay, as you can see here, right, the momentum of a trend is going down, and the further the price to the dots means the stronger the momentum. Okay, the further the dots, the stronger the momentum in downward or upward direction, depending on whether it's upward or downward trend. Okay, and if it's close, it usually signals that, you know, hey, price might be reversing. There's a chance that price might be in a going in a different direction. Okay, it might be reversing, so it's a time to take note when prices are closer. Okay, so when price comes close to the dots, it's actually signaling potential reversals of the trend. So you have to take note when the price are really, really close. That's why there is so this is a downward trend. You can see that my dots are here, but once it actually breaks out of here, you can see that it goes in my dot goes in the other direction. So when it goes the other direction, it means that my trend is reversed. Okay, that's why there is down and up. You can see these few lines that are out of nowhere is because the trend has reversed. Okay, this is how the parabolic SAR works. Okay, so how do we use the parabolic SAR to actually help us put our trailing stop loss? Is the same thing. So our breakout is here. We are looking to move our stop loss accordingly, because you have to ignore the rest of the part. Okay, because let's say we are looking at this level now, this price point. As it breaks this level, I will move my stop loss here, correct? Because I won't be able to see the rest of the dots. So it goes according to where your price is. Okay, so for example, if I break this level here, I will move my stop loss here. If I break this level here, I'll move my stop loss here. If I break this level here, I'll move my stop loss here, which I eventually got stopped out. Okay, so how it works is you have to come in manually and check your position, and you will move accordingly to where the parabolic SAR is telling you. So once it actually hits my, the dots hits my candlestick, it actually already signals a reversal. Okay, so this is how you do your parabolic SAR trailing stop loss. And lastly, we have the chandelier and our average true range. Sorry, I need to catch my breath, and I sort of forgot. This is our average true range, depending on the chandelier. So depending on what period you use, generally for give me 1 second. Okay, generally for chandelier is period 22 multiplied by 3 times ATR. Okay, to period of 22. This is the standard. Okay, so what the chandelier and the ATR does is it tracks the volatility. Okay, so it writes on the volatility of the chart itself. So for example, same thing, your stop loss is here, breakout. We are looking to move according to where your chart is going, where your trend is going. So I would like to highlight again for your trailing stop loss techniques that I have taught you all today. It only works if it's trending in a trending momentum or in a trending direction. Okay, usually if it's choppy like this, you won't be able to put your stop losses right clearly. So this also don't work well with reversal trades. Okay, for example, if we are looking at a trend that is going this way, and then you want to take a reversal here, right? It doesn't work because if we are looking for a buy, your stop loss should be here. So sometimes it doesn't work for a reversal trade position. Okay, now let me bring you all to a real life example. I can do probably one real life example of all the part 1, 2, 3, 4 of trade management. Okay, just to show you guys an example. Okay, before I actually have a run off for another webinar. So okay, let's start with our take profit stop loss. So take profit stop loss. For example, we are in a trade now. Okay, I'm looking at a double top sell. Sell entry here. Okay, your stop loss. Let me just place all the lines first before I actually explain part 1, 2, 3, 4. Okay, so remember always, if let's start with stop loss and take profit. Yeah, so stop loss, let's say if you're placing here, remember, if this is a key level that you're looking at, always place your stop loss above, correct? Because stop loss, where's my box? Stop loss often is beyond. Take profit always before. Let me make it bigger. Okay. So this is what we are looking at. If there is confluence zone that is here, okay, and then there is a key resistance level, there is a retracement level whatsoever, right? You often do not want to place at that level because there is a very strong magnetic zone and price might come back here to test. So often your stop loss is beyond. Take profit, often if this is the key level that you're looking at, there is a confluence zone here, you want to take profit before. So take probably like a couple pips before, rather than coming to this level where there might be some commotion, or people general public might be already taking profit and then you want to take a risk. No, so you take profit before. Okay, take profit before others. Okay, and then we have learned also your partial profit, your break even. So break even is when you are in profit and you move your stop loss to entry. Okay, so for example, if price actually your sell entry, right, you are already in profits. Okay, so we are in good profits, and then right here, maybe at this level, okay, I might take partial profit because this level here might be my key support. So I will take partial profit here, and then I will move my stop loss to my entry, because at this point in time, I know that, hey, I've taken some profit, and if prices actually does reverse from here on, I know that I won't be in any loss. Okay, so partial profit and break even often come hand in hand. Okay, you don't want to just take partial profit and leave your stop loss up here. So if it actually comes back here or even go to your stop loss, you are actually losing money. So it doesn't make sense. So often than not, they work hand in hand. So take partial profit and then move your stop loss accordingly. And then we have our idea invalidation. That's the part where you want to salvage your losses. Okay, and it's often placed before your stop loss. So if price actually comes to this level here, that will be my II. Okay, so if price comes here and touch this level, I know that this trade won't work anymore. Okay, I will be thinking of ways to get out of my trade. I'll be thinking of ways to actually get out of my trade. Okay, once it touched this level here. Okay, so the whole reason of having an idea invalidation is a trigger point or a alert point where you know that, hey, you have to get out instead of hitting your whole stop loss. So what it means is, if let's say my my position hits my ideal invalidation, I will want to move my take profit upwards to my entry. So always remember, it's moving your take profit to entry. So one is stop loss to entry, one is take profit to entry. Okay, that's the major difference that I've been highlighting to you guys. So you move your take profit to entry. So there is a chance that, instead of moving all the way, it might come here, touch this level, bounce back, and then you get you get break even. Okay, instead of getting hitting your stop loss. So I is often a place or a trigger point where you want to get out of the position fast. If you're lucky enough, you might, get break even. If not, you'll just hit stop loss. And last, today we are learning about stop loss, different techniques, how to use it. So often than not, this one rides on a trend or a strong momentum. It doesn't work if it's choppy or if it's not trending. Okay, so if you are looking at a for example indicator, okay, let me show you moving average. Okay, so moving average, how you actually do it. Oh shoot, where is it? Okay, now we're looking at a moving average. If you want to adjust it accordingly, just click. Let me see the 50. Yeah, so this MA50. So that is how for UMA, this is double click it and then you can adjust the length. Okay, so this is a 50 SMA. How you actually work is identify your support resistance. This is a level that I'll be looking at. So once my this is my sell entry, my take profit somewhere here, and then it's ignore. So once my why is it below though? Give me 1 second. Okay, so for example, let's just use trend line instead. So for example, if I'm looking at this level here, once it breaks this level, maybe I would potentially move my stop loss to my sell entry. Okay, because this is a important level that we are looking at. Okay, so I might bring my stop loss to sell entry. Okay, and if it breaks this level and break this level, then I might move my stop loss down to this level. Okay, so this is the important thing that I want to leave you guys with. I hope you guys have learned as much as I did. You can try it out, all the different methods that I have shared over the 4 series. If you have missed any, just check out the IronFX website or our YouTube channel. Okay, thank you guys for tuning in today. I have to rush off, so I will see you guys next week. Thank you.
These are the natural resources that make up the building blocks of the global economy. Hard commodities are mined or extracted from the earth and include gold, oil, copper, and natural gas. These include agriculture products such as coffee, wheat, and lumber, and livestock such as hogs and cattle. Commodity prices are mainly determined by supply and demand, the weather, global economic development, and technological advances, political events, and the US dollar. For instance, changes in supply have an impact on the demand, so low supply leads to higher prices. In the agriculture sector, grains can be very volatile during the summer months or during any changes in the weather. Population growth and limited agriculture supply can provide opportunities to profit from increasing agriculture commodity prices. Trading CFDs on commodities is the most convenient way to access the commodities markets. A CFD is an agreement between the buyer and the seller that pays the difference in the settlement price between the open and closing trades. With CFDs, you're speculating whether the value of the instrument will rise or fall. One of the benefits of CFD trading is that you're trading on the expectation of a price movement, so you don't actually buy or take physical possession of the underlying asset, and you can still make a profit when the price of the commodity falls in value, not just when it rises. CFDs give commodity traders much more flexibility and more opportunities to earn from market movements. Commodities are an ideal way to diversify your portfolio. The prices of commodities tend to move in the opposite direction to stocks, so investors also demand on commodities during periods of market volatility. In particular, investors choose to invest in precious metals, particularly gold, which is known as a safe haven asset. Another reason is that precious metals can be used as hedge against periods of high inflation or currency devaluation. However, commodities can be risky investments because they can be affected by uncertainties that are difficult to predict, such as unusual weather patterns, epidemics, and natural and human-made disasters.